my sense is that this development in the G20 summit has actually encouraged the use of ethanol, and biofuel is one aspect where India has the technology, has a significant amount of it taken an initiative about a couple of years back. So I think you're going to see a very large export market opening for most of the sugar companies, specifically for ethanol. And as far as the capital goods is concerned, I think there cannot be any company which can outbeat Praj. They are not only into the making of ethanol plants, but they are also doing a lot of R&D on compressed biogas, specialty aviation fuel. So I think going forward, you're going to see a lot of interest coming in for these companies. Possibly some companies could get in large export orders over the next, say, 12 to 15 months. And I think, the kind of roadmap which the Prime Minister Narendra Modi has pointed out, I think clearly points out that, technology access to certain countries which don't have will also be shared by Indian companies. So I think it's going to be a very big opportunity. The markets have obviously rewarded all these companies by, showing a strong bounce back in the stock prices of all sugar and especially larger ethanol players. But I think over a longer period of time, I think these would definitely give a decent risk reward to investors, provided the view is slightly longer term. Because probably for action to start on the ground, it would take some time. But yes, I think the roadmap is very clear. And over the next, say, couple of years, you could see a lot of benefits coming to companies like Balrampur Chini, Dhampur Sugar, Praj Industries, Triveni Engineering, which are very large players in the ethanol space. Canara Bank, I think we can definitely look at holding on for the next 12 to 15 months. See, I think in terms of the operational performance, Canara Bank has done remarkably well. The loan book growth, the asset quality, the disbursements have been pretty good. And I think, there's a lot of catch up in terms of valuation if you look at Canara Bank and the larger two banks like Bank of Baroda and SBI. Our sense is that, if he can give in a little more time, then I think he could expect targets of at least 380 to 390. So I think that would be a good time to book out some part of the holdings and book out some profits. But till that time, I think I would suggest him to hold. Definitely, you could expect a stronger second and third quarter, and obviously FY24 should be a lot better compared to last year. No, I think, I think Voltas management has now aggressively chalked out expansion plans and wants to be a little more aggressive player in the, consumer durable as well as the AC market. And I think the chairman rightly pointed out that possibly the next 2 years are going to see explosive growth for the company. My sense is, I think if the investor has a slightly medium-term horizon, definitely our sense is that, demand is picking up. The company has a very strong market share. And hopefully, if the raw material prices are under pressure, plus the weather season is also good for companies in this sector, then I think you could see better earnings traction. For a long period of time, especially last year, the numbers were slightly under pressure. But I think FY24 has started on a good note. So I think he could look at higher levels, provided he is willing enough to wait in for the next, say, 12 to 18 months. But I think definitely he should hold on. He could expect a better risk reward, if he can hold on for 12 to 15 months. I think he's got a decent amount of margin of safety by investing early in this stock. But I think as far as the future is concerned, we believe that, KPIT Tech is one of those companies which will benefit significantly from the electric vehicle kind of segment. And not only India, but even globally, they have large marquee customers. So my sense is that, despite the fact that the stock has almost doubled from his buy price, if he can hold on for the next couple of years, I think the growth momentum and the growth journey for this stock will be quite solid. So continue to hold, and I would not be surprised that further re-rating could be expected, considering the fact that there's a lot of investments which are coming in the electric vehicle sector over the next, say, 2 to 3 years. As of now, I would believe that, it's better to probably wait for some time, because crude prices have started inching above $90 a barrel, and all oil marketing companies, the profitability is dependent on the crude price. Despite the fact that Chennai Petro is basically a subsidiary of IOC, I would suggest that, if he at all wants to invest in a oil marketing company, then it's better to invest in the parent, that is Indian Oil Corporation, which seems to be well positioned, in terms of the size, in terms of the geographical reach. My sense is that, probably, if he wants to invest, he should invest slowly, because considering the fact that the first quarter has been quite challenging for oil marketing companies, if at all crude prices further inch up, then that would actually lead to a little compression on their gross refining margins. So I think it's better that he starts investing in a SIP manner and takes a long-term view. But yes, I think IOC would be better, considering that, that would include the entire consolidated, entity when he goes in for this kind of investment. I think, Shristi, as far as Praj Industries is concerned, I think he's gotten at a very attractive level. And I think looking at the kind of opportunity for ethanol globally and the kind of very strong order book which the company already enjoys, my sense is Praj is headed very strongly for higher levels in the coming 2 years. They're sitting on a very large order book for ethanol plus CBM as well as specialty aviation fuel are also products which are very shortly going to be commercialized. So I think he could expect a significant risk reward even from current level. So I would suggest him to hold on. CSC is largely into power generation, Sisti, and I think power generation companies have been the flavor of the market. My sense is that if the investor can hold on for the next, say, 12 to 18 months, I think you could expect a decent risk reward here, considering the fact that in Eastern India, CSC is a very large power generating player, and more importantly, has been a very profitable player ever since its inception. My sense is that he should hold on. He's gotten at a very good price of around 85. He could expect a price target of almost 125, 130 over the next 12 to 15 months. As far as lemon tree is concerned, Srishti, I think he should hold on. I think within the hotel pack, specifically the affordable hotel segment, lemon tree has been aggressively adding room inventory. And I think over the next 2 years, we could see a significant increase. If the investor has a couple of years in mind, then I think he should definitely average out. I think, many retail investors have got stuck up after the public issue of LIC because ever since the IPO happened, the stock has not given, any kind of decent returns. But I think looking at the opportunity for insurance over the next, say, 2 to 3 years, and the fact that LIC commands a large 40 to 45% market share, and plus the fact that the management has reiterated that they want to make it a more profitable organization by focusing on very profitable kind of policies. I think it's a matter of time. In near term, the investor could lose out, but in the longer term, I think if he averages, I think he could definitely expect a decent risk reward. So I wouldn't suggest him to book out in a loss, but I think he can average and take a 2 year view and continue to hold. The entire agrochemical space has seen a lot of pain, but I think he still managed to make a decent money in Dhanuka Agritech. Our sense is that possibly the September quarter also could be a timid, mild quarter, but thereafter I think a lot of inventory destocking which has happened will balance out, and I think you're going to see a good bounce back for the next season. So I think if he can hold on for the next, say, 12 to 15 months, obviously I think Dhanuka Agri can be a good pick for him. He should earn a decent risk reward, but I think all that should possibly happen in the next season when the inventory destocking effect gets completely eliminated. So I think continue to hold, keep a time frame of at least 12, 15 months. Cheryl, I think as far as HL is concerned, I think it's a pure defense play, and I think the kind of announcements which have come in from the G20 summit clearly point out that defense is going to be a very big multi-year theme. So I wouldn't suggest the investor to book out in a hurry, considering the fact that it already has an order book of more than 50,000 crores. More importantly, visibility for the next 2 years is very strong. I think some more announcements, post the G2 summit could come in, and I think that could definitely help HL quite significantly. So I think continue to hold. One could expect a decent upside over the next, say, 1 to 2 years. Is one of the larger aggressive players in India. I think a lot of activity is happening on the electric vehicle side, and I think the company is now doing a lot of R&D in developing products for the EV sector. See, our sense is that over the next 2 years, you could see a lot of traction coming in from the EV segment. With the economy picking up, I think core sectors also contribute significantly to the company's top line. So I think it's a hold. The investor has entered the stock at a slightly higher level, but I think if he can keep a time frame of 2 years, I think he should definitely get a decent risk reward. South Indian Bank has done remarkably well in terms of the financial profitability, in terms of the balance sheet, as well as its CASA ratio. More importantly, the smaller banks have been generating a very strong profits. And I think the alpha generation year going forward also should be pretty strong. So probably a price target of around 29, 30 is very much possible for the next 12 to 15 months. So continue to hold.